Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Once again, happy Friday, everybody. Hope you are doing fantastic. Well, it's a bright, sunshiny day out there, and the beginning of the week started with, it's dreary and rainy and some hail. So the weather was actually really cruddy, and now we have a wonderful day, and the weekend is looking fantastic. So I hope you have big plans to enjoy it. But the market and interest rates experienced something quite similar. For the very start of the week, we saw interest rates continue to decline and get worse. And then all of a sudden today, saw the market rally, and we are finishing the week up just slightly of where we ended last week. So rates are about the same. So we just saw a reversal of fortune, much like we're seeing in the weather out here. We didn't see a whole lot of economic data that was released into the market. The most important number was out today, and that's what's caused the market to rally, and I'll talk about that in a second. But we first saw the producer price index come in, and that was actually a big surprise. It caused the market to actually deteriorate fairly significantly. It showed an increase of 0.5% versus expectations of about 0.2%. The year-over-year number on the headline number went from 2.5 went from 2.3 to 2.5, so also a pretty big jump there. Now, the producer price index measures inflation at the wholesale level, so when we see such a big increase, that causes some inflation concerns. The core level was also up, not as much. It was up 0.4%, and the core overall number went from 1.6 to 1.9, so still not at that 2% level. Now, the producer price index, while it's watched, it's not as closely followed as the consumer price index, and that came out today. And again, that now showed, and that caused the market to rally because that showed that, well, maybe inflation isn't as big of a concern. We only saw an increase on the headline number of 0.2%, but actually the year-over-year number went down to 2.2 from 2.4. And then if you take a look at the core number, which strips out the volatile food and energy, that actually only showed an increase of 0.1%, and the headline number went from 2. Well, on the core went for year over year went from 2 down to 1.9. So that showed that actually inflation is tempering a little bit, and so again the market is reacting positively, and we're seeing rates finish about where they ended last week. Now, one little piece of information to note in this consumer price index, it showed that rents on a national basis are increasing at a level of 4%. Per year. So again, that's just something to get out to those first-time home buyers. Rents will just continue to increase here with these low vacancy rates, especially here in Denver, and so it just increases the case for actually buying your house as opposed to renting. So. Also want to send out a very happy Mother's Day wishes to all those mothers out there. Thanks for all that you do. Make sure, if you're not celebrating Mother's Day yourself, make sure that you're making your mom feel very, very special, or your wife, who is the mother of your kids, feel very, very special. And thanks for all that you do. And I hope all the mothers out there have a very wonderful Mother's Day weekend. Thanks for joining me with Java with Jared. We'll keep you informed as to what happens next week. There's going to be a lot more on the economic side that gets released in the market. We're up against some technical levels here, so hopefully we will maybe break through next week, or at least hold these levels, and we don't see a further deterioration. But we'll keep you informed. If you have any questions, give us a call. If you're working this weekend, so are we, so call us, and we're happy to help your clients. We'll talk to you soon, okay? Bye-bye.